Hi everybody. Hey Phil, how are you?
How are you today?
My name is Tim. I'm co-founder of Argomi. We are an enterprise fintech SaaS company, as well as managing director of JL Capital, a hedge fund based out here in Singapore. So Phil, how you been?
I'm alright, recovering today, but I'm okay.
Long time no see, kind of?
Yeah, we haven't caught up in a while.
So what have you been up to recently? I think I saw a photo of you somewhere, online.
Yeah.
Caught up with, I think, one of a longtime friend that first introduced us, I guess probably like 8
years ago.
8 years ago-ish.
Yeah. So when you want to start a business, I think the first thing you should do is probably have a psychological exam. Go get your head checked, and then once that comes out okay, people say, yeah, you're good to go. Then you start talking to investors. So last night, the picture you saw, I was at SLH House here in Singapore. It's a new whiskey champagne bar. They have some of the best champagnes and whiskeys in the world.
Interesting.
There at the bar, it was a private dinner, just with a good group of friends and a few potential investors.
Yeah.
And so whenever you're at a dinner with investors tend to determine how much you eat and what you drink. So I was with an investor who he certainly liked all the spirits and wines and a few of the champagne. So it was a long night.
Created the paradigm for the evening. Defined it slightly.
Yes.
Yeah.
He's become a good friend over the past year or so, but I will never ever try and compete with him again and what we drink and when we drink. Sure.
I mean, whiskey as an asset class is kind of interesting, right, in itself. I mean, like, we just kind of seen, like, I think out here in Singapore, but globally speaking, well, first of all, there was from a consumer perspective, a massive interest in whiskey. It seems like after wine.
Yeah.
And actually, in the last couple of years, we've seen whiskey funds.
Yes.
So it's quite interesting to see things on the fringes get almost institutionalized as an asset. To the point where it can get kind of bundled into something that,
sure,
pools of investors can kind of try and participate in.
Yeah, in my travels, that's one of the main things I learned, that they're now dedicated just whiskey funds, whiskey trusts. As people sold off their wine collections, put them up for auction, a lot of that money just went into whiskey or champagne even. So
sure. Hey, kind of quick question here, I guess. What do you think about that in terms of things like whiskey as an investment? See, because here's kind of like how I've kind of looked at it personally, and I think to a certain extent everyone's got a different way of looking at it. To me, when I try and distinguish between speculation and investment, right, my personal kind of take on it sometimes is that speculation requires someone for you to take it off your hands at a certain point, to buy it off you, right? Whereas inherently some form of what I classify more as an investment, as a long-term investment, is something that doesn't require that. That they can discount cash flow, for example, and present value something you can hold in theory in perpetuity, and kind of the value of that asset, can always be calculated and present valued. And with the lack of cash flow streams, for example, to me, I guess, does it just become like a price anchor, right? A price point that's just kind of arbitrary, built upon like perception, obviously some supply and demand, right? So I guess kind of question, what do you think about kind of like, people trying to bundle like, art and wine and, traditional or non-traditional assets into packaging them as investments, if you will?
Being a former finance guy working at banks for many years, like you, I always thought about investments from a traditional standpoint. And so I guess the previous frame of reference was anything that was speculation would depend upon the level of return you could expect and when you could expect that return.
Right.
And so speculation sat in that gray world between what's just outright gambling and what's an investment.
Right.
But as we see this kind of stagnant performance in the traditional investment world, people are starting to look at non-traditional asset classes or non-traditional places to park their money. And so whereas from an investment standpoint, you might buy the distillery and of course you have cash flow, you have the salary, you have land that the distillery sits on. But if I'm just a pure speculator and I can't afford to pool my money with a group of friends and buy a distillery, I can just buy this rare vintage that I know based upon previous experience, that if I hold it for 20 years or if I hold it even for 5 years, then I might make a 5x or a 10x on what I purchased it for.
Yeah, absolutely.
So I think there are a lot of people who are operating in that space now. So what I've seen is that some investors who will buy these rare vintages, or they'll buy something that they think has a high probability of becoming rare in a 5 or 10 year time frame. And there are even people now buying barrels and pre-selecting how that barrel is charred or what wood goes in the barrel, and interacting with the flavor profile of whiskey or scotch, the single malts.
To segment it,
exactly.
To create new segments and be able to kind of price things.
And the spirit industry, to its credit, is actually catering to certain, I wouldn't call them ultra high net worth individuals, but just high net worth individuals, to offer them this unique experience. So I think it's very much just a social trend that has emerged now. Will it last for 20 or 30 years? Probably not. But if you're holding a 30-year bottle of King George or Royal Lochnagar, you should make some money.
Yeah, you should be good to go. So actually, I guess let's kind of backtrack slightly and zoom in. I guess tell us a little about yourself.
Sure.
Let's start from the very beginning here. I guess we've known each other for about 8 years, and throughout that time, for me at least, I've always met you, hung out with you out here in Asia.
Yeah.
But for the audience and for everybody out there, why don't you tell us a little bit about yourself?
Yeah. So in the beginning, as they say, I grew up in Memphis, Tennessee, which is very much a small, relatively small, southeastern town. I think it's technically the 20th largest city in the U.S., but it's about 1 million people in the metropolitan area. I went to public schools all my life, really. But one of the great things that my parents, I don't know if they did this intentionally or unintentionally, but I'm going to say it was intentional because I think it's a better story. But my mom decided early on that even though I would attend public schools, that it would purposely drive me about 30 to 40 minutes every day to a school where it was a diverse population. So I didn't attend ever just one ethnic group kind of a school. And that exposed me at a very early age, from probably 6 onwards, to the fact that there's a lot of diversity in the world. There are people who have different opinions, different beliefs, different cultures, but yet we're all in this melting pot, and some of the best ideas come through this interaction with other people and other cultures. Yeah. So I did that, of course, during your parents' house for 18 years. Then I graduated. I went off to, effectively the Army. I went to West Point, which was an interesting experience because in my house, my parents were always, you're free to do whatever you want as long as you follow these rules. Whereas when you join the Army, you're not free to do whatever you want, whenever you want it, ever. So the first year of being at West Point was a huge challenge for me because I could always express opinions at home. 3 days later, you're at West Point. You don't speak unless you're spoken to. And even when you are spoken to, everything is yes, sir, yes, ma'am, no, sir, no, ma'am. And so that was a huge cultural adjustment. But people who go to West Point, we like to say, for the most part, it's good to be from there than at the place at any given time. It's just kind of one of our inside jokes. But it's a fun environment where you're able to learn leadership skills, understand that you were never always the best at something, but really to kind of, I would say, improve this passion for competition. So that was fun. I was in the Army for a bit. And then I left the Army kind of middle 20s and joined UBS as an analyst in their program. First as a wealth management advisor, and then I went through the sales and trading program as an analyst to work on the trading floor. And at that time in Stamford, Connecticut, UBS had the world's largest trading floor, which looks like an aircraft hangar. There are actually 2 floors, the floor above people, the floor below computers and servers. And so that was sort of my first introduction to how technology and finance intersect, and how the economy really, from a financial standpoint, runs around how quickly or how well these firms use technology.
Sure. I mean, I guess that's a pretty interesting sequence, right? To go from I guess a normal high school, I guess, to a military academy to a trading floor. I guess each one of those seems like a very interesting shift. In environments and personalities. But I guess for me, I guess personally, I've spent some time thinking about it, and I myself have never had the experience that you've had in terms of being in the military. But certainly, I do like to read and learn from great tacticians and people who have really accomplished a lot in that arena. And one of my favorite books, and a core value actually of the fintech company that we've built is extreme ownership, right? And there's something around that The book is fantastic. Highly recommend it if you haven't read it. Basically, um, talks about basically the Marines, right, and the Navy SEALs, and how they actually have to effectively communicate to each other, and how to really work as a team, and how you're stronger as a as a team than as individuals. Right? You can accomplish a lot more beyond what you actually thought.
True.
And so, and kind of like owning up in the communication channels and the clear cut kind of objectives and understanding why you're doing anything, right? And so, or the most effective units, at least in the world, would be. So, that's something that is kind of interesting to me because, to a certain extent, I when I look at businesses, I do kind of feel that the best businesses in the world embrace that same mindset, of ownership and of communications, of understanding, like, the environment that you're in and updating information, right?
Sure.
As environments change, as new information comes in, how do you react to that? And kind of looking at things sequentially, logically, and trying to be efficient about that. I think there's something around that I feel like I myself personally felt when I went into finance a little bit. I know it sounds like a stretch, but there is something around the discipline and the mindset of kind of learning the ropes around how you model things, right? About how each department, has, how they interact with other departments, right? How you gotta send information around, how you gotta communicate, the gravity of it. I mean, one is lives, and one is money. But if when you're managing money, for example, of retirement savings, it's basically almost kind of like life. You're managing lives, right? And their collective blood, sweat, and tears, and savings. So there's some gravity. There's some kind of gravity around, kind of both those fields, and it's very interesting for me, I guess.
Yeah, I would say that when I was in the military, we would always look at business organizations and say that, okay, those guys are running more efficiently. And then when I joined the financial world, most people that I would interact with say, oh, we need more military people to join because the military operates more efficiently and they communicate more effectively. And what I've learned is that it really boils down to the culture of the individual organizations. So for example, you can find a military unit that doesn't communicate well, they don't train well, and therefore if they were to go into a combat situation, they will not do well. And that's the same in the business world. You can find an organization that they have a very staid, solid culture in that this is our way of doing things that doesn't adapt to time, and eventually competition just wipes them away. And so what I've learned, kind of the best of those both worlds, is that yes, you need a leader, but how the organization itself thinks and adapts is critical. Because without adaptation, someone inevitably you're out-competed.
Sure.
You lose. And in the military world, that's a loss of life, as you indicated, and in the business world, that's the loss of the bottom line, and then you're irrelevant.
Sure, absolutely. I mean, how was that initial shift? I mean, what was the process? Sharing a little bit about like how when you first started looking for jobs. I mean, was it easy? Was it hard? And just a little bit from my side. I mean, I was not a great student, flat out. I certainly have some regrets in my life, and kind of not getting the most out of my undergraduate experience, and not fully kind of being that curious, inquisitive mind, I guess, back then, and embracing all, that approach. I certainly was a bit, I had a good time though. I had fun. So when I actually went to kind of start looking at jobs, I had a moment where, I was probably not nearly as disciplined as you coming out of West Point, but I had this moment where I had some kind of notion in my head prior to joining finance, maybe pseudo Wall Street like, or Wolf of Wall Street, or something around that, whatever. And when I went in there, I was struck by, kind of like the volume of the trading floor. The first time I stepped in there, the dealing room, I was like, wow, the energy here it's almost tangible, right?
It is.
And then I was also intrigued by the kind of fun that people were also having, within there. So it was a fun and serious environment that I was confused by. I always thought it was just fun. As an outsider looking in. But that kind of balance was interesting. Kind of hit me pretty early on, and kind of sparked some deeper interest in me.
Yeah, you're absolutely correct. So, I think any teacher that I've ever had will tell you. And in fact, before I was admitted to West Point, the head of admissions called my high school. I think it was a calculus teacher, and he asked flat out, "Will Phil do well academically at West Point?" It's like he has all the leadership attributes. He's played sports, he's done all that, but will he do well academically? And my teacher said something that I think is true to this day. If Phil wants to do well, he will do well. If Phil does not want to do well, he will not do well. And they asked him, what do you mean by that? And like, listen, if Phil is interested in something, he goes all the way. But if he's not, he's just going to do the bare minimum to pass and move on. And so when I think back to that and I look at my West Point days or even in my career, the things that I'm interested in, I want to know everything about it. I want to know the ins, the outs, why it works, how it works. I think if you kind of look at it from a philosophical standpoint, Ray Dalio at Bridgewater, he's always like, well, what is true? So I'm always looking for what are the facts here? And then what's the psychology driving this particular problem?
Absolutely.
But then if I'm not interested, then what do we need to do to make this issue or this test or this subject
go away? Yeah, absolutely.
So coming and transitioning from the military where, okay, yes, there were certain things that we could do that were just checklist items. But then there were other things that you literally need to stop, think about, and have a coordinated game plan. I always love the planning. I always love thinking about the contingent scenarios.
Sure.
But in the business world, you have thinkers and you have doers. And when you are transitioning as an analyst, you're not a thinker. You may have great ideas, but you are a doer as an analyst, an associate, a junior banker, a junior trader, junior salesperson. You are a doer. And so a lot of those tasks came quite naturally and easy for me. The part that was more interesting was learning finance. So I joined the business in 2006, having been a history major and a civil engineering major at West Point. And I didn't attend business school in that transition. So learning things about the Fed discount rates. I was always interested in economics from a macroeconomic perspective, but once you started applying that to specific assets and instruments that we use in finance and business, that part of it was very much an education that occurred on the job, on the desk, just through talking with various strategists, economists, the salespeople and traders around me on the trading floor.
Sure.
So coming of age during the financial crisis was a blessing. I mean, you talked about having that sense of electricity or that tangible feel for finance. Those days where there were market-moving events, Ben Bernanke coming out with extraordinary adjustments to policy rates, or being around in March of 2007 when really that's when the financial crisis started with Bear Stearns having to report some issues within CDOs and their real estate holdings, and you're like, you could. It was palpable the fear and the energy and the anxiety in all of these
the exuberance and the fear, I guess. Both ways.
I worked at UBS, so it was more the fear.
Well, I do want to get a little bit to what you're doing right now, and to tell the audience about what you're doing, but just kind of want to kind of segue to that a little bit, kind of piggyback on what you mentioned earlier, I guess, because I find myself really, really agreeing with you there in terms of coming in as an analyst, you're more of a doer than a thinker, and just kind of clocking in time. I guess it's like Malcolm Gladwell, clock in those hours, those 10,000 hours, and really just kind of working the way up from the very beginning and just trying to understand how higher level kind of derived understandings and insights start from the very, very beginning, right? The building blocks of knowledge. And so for me, I feel very strongly that in order to become a thinker, it took me a long time of grinding and repetition and a lot of work, late nights, just clocking in, a lot of trades, getting calls, getting hit, like huge volume of rinse and repeat to a certain point where it starts to make sense. I guess that never for me was there a moment where there was a light bulb moment where it was like one morning I woke up and it was like, now I kind of have this vastly greater understanding of the world and how like it really works. But it was kind of like a marginal, incremental thing that kind of creeps up on you, as you kind of go along. So for me, I really, really agree with that in terms of, and I guess that kind of leads me to what I guess we're both trying to do here, building our new businesses. Both of us have left the bank side, the sell side, we've gone to the buy side. Kind of the segue for me was that it took me a while to get creativity, to understand how to be creative within finance, right? And I think, when I was kind of younger, first entering the field, first of all, I thought the markets were totally efficient. Coming out of undergrad, you kind of look at it, you assume that there's a magical formula somewhere that you just haven't found yet, that everyone's kind of like not sharing with you, to be able to make shit tons of money, and it's just going to be like the end all be all. But, and then over time, just kind of realizing that okay, actually things are not set in stone, right?
No.
There is room for innovation, right? There is room for improvement.
No.
There is room for reiteration and evolution and change, right? Even if it is within the paradigm of a very serious, like in finance or asset management, if you're banking or whatever.
Yeah.
So kind of from that, can you tell us a little bit, I guess, about what you're doing right now and what are you looking at? What's piques your interest and I guess what's boring even?
Yeah, I think the thing that piques my interest is if you were to take a triangle and the 3 points, it would be this intersection between social change, finance as we understand it, and then technology. And so the new firm that I'm creating, which we just settled on a proper name for this week, Abil Asset Management, we want to operate within that triangle. And what I realized is that most traditional asset managers or funds, they say, essentially their pitch is, give me your pool of money, I will manage your pool of money, these are my 10 choices, and I will allocate a portion of your funds to these 10 choices, therefore you have diversification. Mm-hmm. Or if it's a hedge fund, this is my strategy, allocate to my strategy. My goal is to make you between 10 and 20% every year, and I'm going to charge you 2% for that, or 1.5%, whatever. It's all the same pitch. What I realized is that the most successful asset managers are not just managing your assets, they're also innovating. And so it took us, my team, because I can't do this alone, it took us a little while to settle upon, okay, what's the true innovation that needs to happen in the asset management space? And then we started thinking about, well, how do you truly monetize a business? Traditionally, monetization, all the alpha generation is done in your front office, and then your middle office and your back office are just kind of like service providers, or they're managing service providers. And so we said, no, we want to monetize every aspect of this business. So to do that, it meant that we needed to think non-traditionally about asset management. We needed to find an edge effectively, because if you're just the latest macro manager who's spinning out of a bank, or in most cases these days a hedge fund, you really don't have an edge, because any edge you have, it dissolves or disappears. Most trading windows are 3 days to 3 months. I mean, we're not in the 90s where you had the great European convergence trade on rates. We're not in a period where the housing market continually booms and you have this robust and great healthy credit cycle. We're in this, what I like to call, interregnum period, where you don't yet really know what will truly lead wealth creation over the next 10 to 20 years. But I think we have an idea. And some of it is technology. But it's technology because people are distrustful of institutions. People are distrustful of their banks. They're distrustful of their churches. They're distrustful of the politicians. And so this distrust of institutions is leading to decentralization. And so we said, okay, we need an asset management firm that does 2 things. 1, that drives technological innovation, and 2, that captures this distrust of other institutions and kind of decentralizes the process. In other words, we have to show people that the emperor actually does wear clothing. He is human, he is fallible. So we tell people in our pitch, at some point we will lose money. The difference between us and the competition is that we won't be satisfied with just losing money. And so I think if you're a traditional asset manager who's managing to a benchmark, and that benchmark is down 5 or 10%, and you're still charging people 1 to 2% to manage their money, so effectively you're charging them to lose money. I don't know how that will remain credible in the next 5 to 10 years. I think you'll see a massive shift where people saying, well, I have information, I have just as much access to information as you do, because now people can pay to join some of these paid news services. I'll manage the money myself. So we wanted to kind of help lead the change in that. So
I love that. Quick question here, and this warrants probably out of time to kind of really dive into this. So maybe another time.
Let's do it.
But I guess my question is, it's almost fascinating to how did we get here as an industry where the principal agency problem has become so severe, where the alignment of interests between, firms are kind of, asset managers and our investors have become so broken, right? In a way where, and I think this warrants, probably an hour in of itself, but.
I mean, it does, but the base thing is that I think our industry went through a very significant battering of trust in businesses. And what is finance without having some level of confidence? And so when you distinguish between trust and confidence, confidence has varying degrees, trust is absolute, right? So trust went away, and now we're just stuck with these varying levels of confidence. And so I think the most successful managers have always understood this, and I include people like Warren Buffett in that. They understand that based upon a certain set of numbers, your financials, your cash flow, I should have confidence that you can make a certain amount of return.
Sure.
So what the street, I think, are great, I won't call it a sin, but I will say it was a great mistake, was to ever try and operate in this realm of trust, because our business is fallible. It's run by fallible human beings.
Right.
What we should say is that based upon our goals and based upon the amount of capital we have, you should have X amount of confidence that we can achieve those goals. And leave it at that.
Sure.
And not ever try and go into this marketers will try and take you into this world of trust. Stay out of that world. You will always fail. You'll always fail. But I do think there's a confidence issue, and that's what's causing this need for decentralization. People wanting to have greater control on their investments, greater control in how they live their lives, and greater influence on how societies shape themselves.
Absolutely. I mean, to your earlier point, I mean, without trust and without confidence, what's kind of left? Right? I mean, like, if you're really, really talking about, going back to the very basics, what's the value of that dollar bill in your pocket or in your wallet without trust and faith and confidence? I guess at the end of the day, and the whole world and all of us, for me personally at Argomi and for our team, that's why I think for us, part of it, another core pillar or core value for us is just total transparency. Right? We think transparency, we personally believe that transparency is a great antidote, or one of the kind of solutions perhaps, to kind of the principal agency gap that we're seeing in the industry today. More honesty, like you said, right? We're never going to give you perfect returns. Like, we're never going to give you 10%, like 15%, like steady every single year, all the time. There will be ups and downs, but, this is kind of how our process and methodology, and perhaps communicating more. I mean, when hedge funds first came out, for example, mostly just annual reports. Right? Very black boxy back then, and just not a lot of disclosure, not a lot of transparency, not a lot of diving into the risks, and stuff like that. It's very interesting because around a dinner table just a couple of nights ago, we had this very interesting debate around investing in Bitcoin in and of itself versus investing in Bitcoin companies.
Right.
And so there was this kind of question around kind of the highway being like Bitcoin and the on-ramps and off-ramps, kind of, or the maturity, or how many of them, or the lack of insufficient, robust, strong on-ramps and off-ramps and use cases, in real life to kind of get to that Bitcoin highway, I guess.
So you're absolutely correct. So we did a little research, and what we found is that most of the development money has gone to creating new blockchains and creating what the industry considers as middleware. Not a lot of money or development research has gone to the applications that sit on top of this highway that's effectively being built. And so our company, we decided, okay, we'll focus on the applications. There are enough people who are looking at the underlying source code and the blockchain.
And it will continue to improve.
That will improve. So we'll focus on the application side and actually creating products that go to businesses and consumers. Because ultimately what will drive true innovation in this space and greater wealth creation is putting something tangible that's meaningful to an individual or a company in their business. And so if it's a business product, something that makes that business more efficient. If it's a consumer product, something that either gives them greater pleasure or makes their life easier. And so we identified a few use cases that I'm not going to talk about here, but that we believe will be transformative in and of themselves. And so to do that, though, we did have to have this huge discussion about Bitcoin and what it means, and I think it's great. The thing that I'm always skeptical about is whenever you have something that has a very limited use case and quite naturally a finite amount of them. I think of the 21 million Bitcoins that are possible, probably only 18 million, 18 and a half of them have been created. I don't know if that in and of itself is the next digital solution for currencies. I think I very much view Bitcoin, and I hope the developers of Bitcoin will take offense to this, as your first IBM mainframe computers. So I wouldn't ever want anyone to give up on the industry just because of Bitcoin. I think Bitcoin itself recognized this, and that's why they came out with the second version, second generation. You also now have Ethereum, and you have some others who are coming to market, who are already in market. So what's going to happen is that you'll see a washout in this industry where we're at 150, 160 billion on the crypto side. That might take a bit of a hit, but it's solely because people haven't yet learned to distinguish between what is a crypto coin and a currency, and then what is blockchain that's underneath it.
Sure.
So what we like to tell people is that all crypto coins are tokens, but not all tokens are actually coins. And underneath that, you just have to do your research to figure out, okay, what is the difference between a coin, a token, and then what is blockchain and how it applies to that world.
Sure.
Yeah.
Well, we'd love to learn more from you on that
We'll do
in
it.
the future. I know you're not willing to talk too much about it today. Please come back again and talk to us in the future about it.
We will.
Phil, thank you very, very much for your time today. I really appreciate it, man. It's always good to see you.
Same
It's
here.
always good to see you. And let's do this again soon.
We will.